Hey everyone, welcome back to my channel. So today I want to talk about the sell-off that happened in September. And I do pre-record some of these videos. So it's unfortunate that I am producing this one super late for all of you. But I do want you to be aware that when I saw that sell-off in September, over 400 basis points in the stock market, yes, I took advantage of that, right? So before we get into that, please make sure to like, comment, and subscribe. There will be another sell-off in December, and we all know that because in December, the stock market goes down significantly every December. If you know that, you should be aware that that is the time to buy in the stock market. You have to know what to buy. You have to do your research. You have to study. You have to understand what you're investing in. By that time, you should no longer be looking at stocks as just stocks, but as businesses and as companies going into the future and how they're going to produce for you. So for me, when I saw a sell-off for 2 days straight by end of September 2023, I said to myself, how can I capitalize off of that? I started to look at my portfolio for what I could do differently, for what I can do to change how I was investing. And so the first thing that I looked to change was the banks that I was investing in. So for example, I had 3 banks that I was invested in. Actually, I have more than that, but the 3 big ones that I'm talking about were Citibank, Bank of America, and Chase Bank. I let 2 of those banks go. While you're liking this video and while you're hitting the subscribe button, I'm going to give you some time to think about what 2 banks I let go. I'll give you a little bit of time. Go ahead and think about it. Just a few books that you can pick up while you're writing that in the comment section down below. All of these books are really good, by the way. This one was one of my favorites. Okay. These are just the ones that I finished, as I stated in previous videos. And these books are just guides, but they're not how you should truly live your life, except for the asset protection. I think asset protection is really good. You should only buy that if you actually have assets to protect. Don't just be buying books to buy books, okay? Now, with that being said, the 2 banks that I let go were Citibank as well as Bank of America. Why did I let these 2 banks go? Well, for Citibank has been underperforming for the last 6 years. So again, when I say this, think about stocks, not just as stocks, but as businesses. We need to understand what we're investing in. What business are we putting our money into? And for Citibank, although the first bank I ever had was Citibank and it's been very sentimental to me, it is not a high performer. It is not a producer. It has never been a producer in the last 6 years, and they don't plan to be one for the next 3 years. So when I also look at their outlook for the future, to me, if it's going to take you 3 years to produce anything of substance, then your future looks bleak. On top of that, you've been a low performer for 6 years already. So I do not want to invest in a company for a total of 9 years and for them to underperform what the banking sector and the businesses have been doing in that market. As for Bank of America, there's a lot of hype that comes with Bank of America, as Warren Buffett is one of the bigger spokespersons for Bank of America. And we all know that banks are going through a tough time right now. A lot of banks are foreclosing. A lot of banks are going out of business. Bank of America will not be one of those banks that go out of business. However, not only are they struggling with employee retention, but they're also struggling to keep their employees happy. 63% of employees at Bank of America state that they are underpaid and they are not excited about the future with Bank of America. If more than half of your company believes that they are not excited about the future, and 63% believe that they are underpaid. What that means is more raises will be asked for, more people will be either let go, or they will be upset with the low salary that they have. Therefore, they're not performing and meeting the productivity standards that I would like to see as an investor. And because of that, Bank of America will need to shell out more cash, more of our investment dollars, in order to appease the employees that they already have. So when you talk about the everyday American worker and why a lot of businesses opt in for the Chinese model, you can see how this impacts their bottom line when you have people like me as an investor who is no longer looking at Bank of America as a viable option because their employees are unhappy. You have unhappy employees, that leads to low production, that leads to lack of quality, lack of service. And I do not want to see my money burn with Bank of America, and that's why I got out of it. Some companies that I bought, because I'm sure that this is what you want to know. What companies did I buy now that I let those two companies go? Well, there's one company that we all know has been very successful over the last couple of years, and I finally decided to take an interest in them as they are growing. So I bought this company near the top, but not totally at the top, and it has been making me money since buying it last week as of the recording of this video. And that company is BlackRock. I bought some BlackRock stock, and it has been performing very, very well for me. I don't know if I have more than one share or not. I think about 800 was invested in that alone at the time of the recording of this video. I believe it was, I can't even remember the price of it, to be honest. I need to get my laptop here beside me. So you can Google what the price of a BlackRock stock is right now, and just estimate back in late September what I may have paid for it. Now, another stock that I bought was ADP, not the electricity, but the payer. So, for example, if you worked for a company who uses ADP for your checks, or something like that, where you get paid every week or every 2 weeks, and you have to download the ADP app or whatever that is what I invested in. I looked at the top companies that offer these services, and ADP was ranked number one. Not only are they ranked number one, but they pay a decent dividend, and they're doing very, very well in this market. In an era where we're going towards more technology and more innovation and more growth, I do believe that some companies will branch off and start to do their own thing within this space. But as of right now, I do believe that ADP will be the top leading producer far into the future. And with all this crypto space that we're doing in crypto technology, I believe that ADP will innovate and advance in order to stay within the forefront of that market and be able to exchange those goods, exchange those services, exchange that monetary value with little hitches and little mistakes. Right now, ADP has been able to process these payments every week, every quarter, every day. And there are some smaller institutions that are able to give you your money a little bit faster. I think some ways ADP can innovate is by offering paycheck assistance, offering to give people their paycheck a little faster, offering these type of little services to increase their profitability. Now, if I worked for them, that is what I would tell them to do. And, one day I'll be in those meetings, one day I'll be in those doors. But for now, this is just one way of meeting that achievement and that goal. So again, that's what I invested in for late September. If you like this video, please make sure to leave a like, comment, and subscribe. And as always, I will see you on the next one. Peace.